Ladies and gentlemen, today in Orion Room, we have a trader who walked away from a stable career to chase freedom.
I started to research a little bit about money, currency, and I started to realize that, in 1971, President Nixon, he decided, the dollar is no longer going to be backed by gold. This, I realized, is not the path anymore. I completed my degree, I became a dentist, but I realized at a young age, there's more to life, there's more things to do, and in any situation.
He went from the euphoria of winning to the silence of losing.
So in a 24-hour period, I grew my account 18%. The comments were crazy. Everyone was calling me the king and the goat and all of this stuff. In a 3-month window, I had the euphoria of 18% in 24 hours and then 7 losses in a row.
But instead of disappearing, he turns his worst drawdown into data.
In 100 trades, there is a 33% chance I will take 7 losses in a row. How about 6 losses in a row? About 54%. So when you're realizing 6 losses in a row with a 60% win rate, which is a good win rate, the chances of you taking 7 losses in a row is going to happen. Everybody should be prepared. I took a 2-week break to compose myself, to come back refreshed. Correct thing to do.
From a dentist chair to the world stage.
18 months, 59% gain. Quick math is that's 3.5% per month. And I consider that very good performance. So when you come to a prop firm environment, why are we chasing 20%? Why are we chasing these home run trades? Why are we chasing 5% risk? Because that's the daily drawdown. Why not? Protect your stop loss. Because in the end, 3% per month is very achievable. I had my calamity period of 7 losses. I had my euphoria moment of 18%. You have a trajectory, and this is your true North Star. This is called your edge.
Today in Orion Room, Waqar Asim.
Welcome back to Orion Room. We're the largest trading podcast in the world in Spanish-speaking countries, and now I'm proud to say that we're also in English. Now we keep expanding, and we have a very special guest today. It's probably a known trader, a known guest for you. It's not the first time that we have him in the podcast, and personally, I consider him also as a great friend of mine. So it's going to be, I'm pretty sure, a great conversation. Apart from his huge figure in the industry and one of the greatest traders that I know in person. So Waqar, welcome to
I'm back on the show, huh? Yeah.
Back on it.
I feel like I'm part of the family. I've been on stage with you in Madrid, and we've now shared the stage online, and for the second time. So great to be back, bro.
Yes. And still many things to be done together, hopefully.
Yes.
Hopefully. How are you?
Very well, bro. I think just like you, in our 20s. 20s is for building, so we could be right now in Spain somewhere on a boat, but instead we're hustling away. So my philosophy is earn the summer. So right now I've been extra busy just to then allow myself to have a break. Yeah. But I see you too. You're hustling just as hard.
And I think in Dubai that has an even more meaningful. The earn the summer.
Yeah,
the summer here are.
People just escape when it gets too hot. They leave. I was like, I will leave, but I will work a bit first. I'll meet some targets and then I'll leave.
Great. Well, it's very great to have you back. It's an honor for me. For the people that maybe they didn't watch the first podcast, long story short, I know that you come from immigrant family. You were having a normal 9-to-5 job. How was your journey for joining trading summarized?
Yes, it's very interesting. I know you like your documentaries and you made your own documentary. So I took on a project myself to make a mini documentary. And through this, I did a lot of research. And the reason I made this documentary was to reflect on my old path, my old life, and now my current life. And it's very interesting because, like everyone here, we follow the path put in front of us. At the age of 16, at the age of 18, it's very hard to make an independent decision because you're a kid. So when I was that age, I follow the path put in front of me from my parents, friends, school, and that path is the path everyone takes. Go to school, go to university, get a job, and then buy a house with a mortgage, and then retire happy. And that's kind of the life. And that's the life. And then you realize this works for our parents. And my parents who went to become doctors and moved from Pakistan to the UK, this path was success. My dad was able to work extremely hard, earn a good salary, and then in the end, buy a house. He was able to invest in things and now have a good, stable life, have a family, and take care of us, the kids. And I looked, if I follow that same path myself, my dad was a doctor. I went to dentistry. I did 6 years of university in Madrid. And during that degree, I realized, this path that I'm following is great. I'll have a respected career. I'll have a good income, $100,000 a year. I'll have a lot of respect. I'm a doctor. But when I realized as I was completing the degree, I started to research a little bit about money, currency. And I started to realize that, in 1971, President Nixon, he through the Vietnam War and other pressures, he decided, okay, the dollar is no longer going to be backed by gold. So brief history there is the paper money that we have used to reflect gold. So it was a piece of paper to say this piece of paper is worth X amount of gold. The US being the superpower of the world after the World War II, they had the most gold reserves. And then for France and other countries who were trusting the US, they hold our gold for us and we will take your pieces of paper. The US being the US, no one questions them, so they started to print a bit more because they realized no one's checking and they print a bit more. And then they go to Vietnam War, unsustainable spending. They want to grow fast, so they just print and print and print. And then other countries start to realize, how is US having so many dollars? Do they still have the gold? So then when they start to say, hey, can we have our gold back? President Nixon in 1971, he goes, today onwards, the dollar is no longer backed by gold. The dollar is just a piece of paper now. So the reason this is important, because around this time, you could work hard, go to school, get a job, get a degree, and you could have a successful life with a salary. The problem is salaries are growing like this, just slowly, but the cost of things are going like this. The cost of assets, the cost of houses, inflation, taxation, all of these things are big anchors now. So what used to be you can buy a house in 5 to 10 years with a good salary, now in the UK and London, 5 to 10 years, you maybe can afford 5%. And then you go to the bank and say, please give me a mortgage for the rest of my life. And then you're trapped. This, I realize, is not the path anymore. And even though I'm doing everything right, this path in front of me is not the right way. So that's when I looked to other things. So I completed my degree. I became a dentist for my family out of respect. But I realized at a young age, there's more to life. There's more things to do. And in any situation, your 20s, you have your highest willpower. You have the highest energy. You can do a lot. In 5 years of my degree, 6 years, I can do a lot. So I decided to do other things, and that brought me to this chapter of trading.
Let's start right there. You were, for how many years, studying dentistry?
So I started in 2015, and I graduated 2021, I think. Yeah.
So 6 years. Between 6 to 10 years is what people normally study these degrees. And the concepts that, for example, you mentioned about the gold pattern or the gold reserve, what Nixon did, or the fractionary reserve, that even the dollars that they are printing, they only need to keep 8% in the bank and they can lend the rest to. All of these things in this 7 years of career, you knew anything about this?
No, I got to know during my degree. My biggest or favorite thing to do is just every day just go on YouTube and watch things, not entertaining things or Mr. Beast. I'm talking more, go down rabbit holes. So I'd end up rabbit hole of this President Nixon. I'd end up in a rabbit hole of different conspiracy theories. But when you connect the dots, you get a good world view and you see, the central banks, the fractional reserve, the wars that are happening, and the mechanics of how everything operates. This is all good to know. But these wars and these banks, they don't necessarily, I can't change it. I can't do anything about it. But when you start to realize the path in front of us, the news, the media, everything we are told, school is propaganda. All of these things can be propaganda. So you have to be careful of what information you digest, because you can be taught breakfast is good for you. And then you realize, these cereals and sugars are not good for you. Breakfast is not good for me. Or, let me take these medicines because my doctor said. And it's like, you look behind it. It's like, no, these are just to treat symptoms. They're not to cure, or they're not health orientated. During my degree, I'm studying about pharmacology, medicine, treatment, but I'm not learning about holistic health. So you realize these propagandas are so deep. And when you look back in the history of these things, not to get into conspiracy, you realize, these are all money driven from the elites, and we can call it conspiracy, but you just look back, it's documented, and you realize everything is propaganda. Taxation is propaganda. Feminism, if I want to go into it, is how does the government double their taxation? Double the workforce, introduce the women. Yeah. All of these things, they stem from money, they stem from control, and then later on media and whatever corrupts it. But I think part of being a independent man, a sovereign man, is to question these things around us. It's not to say I say no to everything I see. It's just question, be curious, and through that you will build your independence. And I started to do that around 2015, and it was a long process. And I tried a lot of things, drop shipping. I did Amazon. I tried a bunch, but in the end, I had an affinity for trading.
And relating this to trading, what grade of importance did you give to fundamental analysis, and making it a more deep question? The news, even the trading news, they are just propaganda to find the counterpart, to find liquidity for the retails, or they really want to inform you?
No, so I was recently in New York, and I was invited into the stock exchange. So I spent 1 week there. The stock exchange had been closed to the public, so it was a very exciting opportunity. And just talking around to these people there in the stock exchange is generally market makers. And it's interesting because I understood market makers as, okay, these guys are here to manipulate, these guys are here, they're the big players there that want, but market makers, at least this is what they told me, behind the scenes, who knows, but their job is to facilitate. So during the time I was there was right after the tariff Trump crash. So when it was falling too quick, the market makers have a obligation to catch the market, to say, okay, let's slow it down, let's freeze the market, or let's put in liquidity. So these things, there's mechanics for the market. But the news, let's say, when I find out the news, when I go online, I'm finding out last. You're finding out last as retail traders. In fact, they said the edge of trading inside the stock exchange, they have a information advantage. It's maybe a few minutes or a few seconds, I don't know, but they have a time advantage. So I asked one of the traders how he trades, and he was explaining it. And I said, oh, so I came to realize he can't trade the strategy outside that stock exchange. He said, I can only do the strategy because I can see the order books before they are placed. I can see what's pending, and I can do an arbitrage here. And it's just from that delay. His whole strategy was this. So meaning to say fundamentals, sure, it's important, but I think fundamentals only work, and I've interviewed a lot of traders that are great in fundamentals, but they are swing traders. They say, okay, based on these geopolitical factors, these economic factors, monetary policy, I know the dollar is going to be weak for the next 6 months, but now do I enter today or tomorrow or next week? Timing the market is hard when you're doing only fundamentals. So fundamentals is not my core. It's not my strength. I didn't actually invest too much time in it. I'm all about technicals. But I can see all the time when I see a news release, CPI, FOMC, I'll see price action showing me signs, and I can have an increased probability to say, okay, this news release will more likely be bearish. And I'm not catching it because I feel like it's still a flip of a coin, but news is catalyst and price action reveals what's going on actually.
I want to know your opinion on the traders that they want to justify every trade, and either fundamentally or technically, they want to know why this movement happened. So for example, there was this drop and they want to link it to this tariffs decision, and this happened because, and they want to really be right about what happened behind it, versus the ones that they don't really care. As long as my strategy is. So what's your thoughts?
Yeah, it's an interesting comment. I think a lot of traders, we need to ask why certain things we do. Where does it come from? Because nobody is born as a trader. So we have a lot of things from our worldviews that we put into the market. So myself even, I have a very university background. So I have a very, let's study, let's work hard, let's prepare for the exam. If I fail the exam, study more. So when you bring this philosophy to the market, it doesn't necessarily work, because more information doesn't equal more profit. Or when you lose a trade, it doesn't mean study more and next time you'll win. Sometimes a loss is part of it. So you have to reshape certain beliefs. And regarding your question, a lot of these beliefs of like, I need to find the answer of why. Sometimes you can and you should find answers, but there is also a limit. And there are certain things where I will go deep and try and understand. But then in the end, if you're seeing a repeating thing, use it to your advantage, even if you don't necessarily know why. I would say majority of the things I understand in the market, but there are some things that I totally don't understand. One of them is going to be this idea of liquidity. Now, liquidity is like the biggest foundation in my trading. It's the most important thing. Liquidity is all I talk about. But when somebody questions me on liquidity, this is where I start to even get confused myself, because I'm seeing every single day a smart money zone, a typical build-up of liquidity, equal highs, a sweep, and then leaving an order block. This sweep zone, this order block here, is like SMC 101, and there's ways to qualify it, of course, but I see it every single day. Price comes into this order block, gives a small reaction, takes it out, and then after it takes it out, then it goes bearish. So when I see these smart money zones getting induced, getting swept all the time, every day, I'm seeing a trend line forming, inducing, and then going that way. Support and resistance, I see it building, inducing, and going the other way. I see this every day, all the time, and I believe it with my core. It's so prevalent to me. But then when I start saying, okay, whose liquidity are they targeting? The retail traders? Interesting. Retail traders is what, 1% of the market's volume. That 1% is also probably trading with brokers, B-book brokers, or with prop firms, B-book prop firms, simulated prop firms. So when I'm seeing all of these retail orders, they're not maybe even going to the live market. So whose liquidity is taken out on the smart money trap? Whose liquidity is on the support level? even though it might look like retail liquidity, it's maybe not. So I don't know the answer to this one. I ask a lot of my guests and no one can seem to give me an answer. But I see it, I test it, I have the data, I have rules around it for validation, invalidation, and I trade it to my advantage. But I don't necessarily fully understand each thing, and that's okay.
I think that's very important, that at the end of the day, we're not here to be guessers or to know everything. We're here to make money and to be profitable and to be professional with our profession, which is trading. And if it makes the same movement, as you said, 100 times over the past 200 trades, and it's a repetitive pattern, just take advantage of it. Why it happens, then you leave it to the next, guy, to the next person. Waqar, after interviewing how many guests we've had already?
More than 100.
More than 100,
yeah.
So far. First of all, when you started the podcast, and now being top of the world in terms of numbers of what a trading podcast can be, what's the key points that you take from your guests?
Oof, man, on the show we've had so much variety. Like had Fabio Valentini, he's a Robbins World Cup champion. He takes like 10 trades a day. Like he's just a hyper scalper. And in 1 quarter of the Robbins World Cup, he took 600 trades and got like 200% gain. So you have these guys that are like M1 seconds time frame. And then I've also had swing traders like Bernd, who's a number 1 FTMO trader. He's taking 1 or 2 trades per month. He's doing 2 or 3% per month. And he doesn't even believe or agree with the lower time frame. So it's opposite ends. Then I've had algorithmic traders, professional hedge fund traders who are saying technicals are not real. Then I've said fundamentals are not important. So it's all a mix. And it's interesting to then observe from a bird's eye view that there is polar beliefs on every topic, from lower time frame, higher time frame, news, no news, technicals, fundamentals, every topic there is a debate. You have people on the extremes who are qualified and verified and profitable, and they believe the opposites. And not only that, they also say, your thing doesn't work, your thing doesn't work. So when I'm seeing all of this, I'm like, this guy's telling me this doesn't work, but I just spoke to a guy who is doing that and showed me it works. So what is going on here? And I think the common thing I can take away from this is all of these great traders that I've spoken to, all of them that have made a lot of money from the market, I'll go for dinner with them after, I get to know them all, and I realize truly they are all very normal people. They don't have any, they're not like a rocket scientist, they're not particularly anything. And you might think, oh, but maybe it's their psychology, maybe they are all very stoic or calm people. Not necessarily. I've had people that are very introverted, very loud and extroverted. I've had a mix of personalities. Some people that come from a rich background, poor background, some from the West, East, like all backgrounds, all shapes and sizes. The common thing is they're all normal people, which then is a very exciting thing, because then you can realize if all these great people were normal and they made it, then everyone watching who is normal can also achieve this. The only difference is I haven't spoken to anyone who's found profits in 1 year. I haven't spoken to anyone that's been doing it less for 5 years. I haven't spoken to anyone that flips a coin and made a big meme coin trade and now is set for life. The principles are the same. It took time, it took consistency, it took hard work, like anything in life. In trading is just less formal because you don't have a degree or a qualification or a university. You have the internet and mentors, so it's a little tougher to navigate, but everyone before us followed this path, and everyone right now on the path will be in the same place in 5 years. So I think the biggest commonality is just time and consistency. A vague answer, but that's truly what I've noticed.
And apart from that, is there any other special trait that you find in common? Because strategy-wise or personality-wise, they can be way different, very different from each other. You mentioned, for example, a time that none of them, they've been less than a year trading or less than 5 year trading. But is there any a common trait to them? For example, I watched a video the other day. They said the high net worth individuals, they all had this personality that they feel superior than the rest, and there was this common trait within traders.
Yeah, I've seen this where the common traits of top CEOs is typically an extremely high stress tolerance, a superiority complex, and there was another one, it slipped my mind, but these are common traits of, and maybe even narcissist tendencies, which top CEOs apparently have. And these things make sense to me. Like if you have a high stress tolerance, you can endure more, you can have that consistency. If you have a superiority complex, you can call it ego, or you call it self-drive, self-worth, self-esteem, confidence. It doesn't necessarily have to be a negative connotation, but when you have this feeling of I deserve more, I can achieve more, you will go out and get it. So these traits make sense to me. Maybe there's an undertone for each guest of something like this, but it's not something that I notice out off the bat. Maybe it's a tough question for me to answer, because I've had people that there's no topic where there was a common answer. Even if we go into risk management, some people are like, no, static risk. Some people pyramid. Some people double down on A+ setup. So you have risk different. Profit-taking systems all kind of different. There's always different styles. And maybe that's another thing, is like there's many ways to find profit in the market. There's not one way. But I think my main channel, my slogan, let's say, or the big statement that I end every video with is a restricted trader is a profitable trader. Now, this is something that I've been saying for years. And in fact, when I interview someone, I always ask a question. And when I hear an answer, often in the back of my head, I just say to myself, in other words, what you just said was, you are restricted, which is why you're profitable. So when I ask them, hey, what times of day do you trade? They'll be like, oh, I only trade London Open. Okay, you're restricted because that helps you be profitable. I only have a fixed 30 pip stop loss because I want to give trade the breathing room. Okay, you have a restriction of 30 pip stop loss. So a common theme actually is everyone has their version of restricted. Now, we're talking about a variety of swing scalp and XYZ, but they are not random. They have their rules and their restrictions. And I think for any trader to really find profitability and consistency, it's how can I take all of this information? And even if you look at smart money concepts, or ICT. ICT is not a rule book. It's not a concept, actually. It's a library of a million ideas. And the reason you have majority of them struggling, I would say, but then you have a few anomalies that I've spoken to on the show that have made $1 million in payouts, $2 million in payouts. These anomalies, they are following the concepts, but they took a few things, they connected it together, they added their rules, they added their restrictions, they added their market experience, their market IQ, and then carved out an edge, and then money management, psychology, all these things to build out profitability. But you can't just follow a school of thought. You need to take all this information you have of SMC, and then you go to Elliott Wave and Wyckoff theory, and you connect it all and say, okay, what is my rules? What are my criteria? And then when you have your criteria, you could say, okay, top-down analysis, supply and demand, lower time frame confirmation, liquidity. Okay, you have 4 things, but all of these things equal? Because, for example, if you have 3 and you're missing 1, is the one thing you're missing enough to say no trade, or is it saying low quality trade? So then you need to have a hierarchy to say, okay, my non-negotiable is I cannot enter a trade without a M1 confirmation. So if I have 10 boxes ticked, but the 11th one is missing, it doesn't matter. It's no trade for me. But then something that is like a preferred criteria would be, if I'm inside a point of interest, I can take a trade outside of a demand area. I can buy outside of demand, but it's not mandatory. So if I have 10 boxes ticked, but no POI, I can still maybe take the trade. So then it's taking your confirmations, your checklist, giving it a hierarchy, and then giving it rules. And then you have your trade models. With the trade models, you have your data, and then you can perform. I think this process of refining down information to edge is a process everyone that I've spoken to has followed, just in their own way. But the key here is probably restrictions led to their profitability.
I think we got it. That was the response that I was looking for. That the bad thing is not to have 100 individuals on your podcast, each one of them talking about contradictory things between them. The worst will be a person that consumes your podcast that will try 100 strategies. Because each one of them, they should have one. They stick to one, to strict patterns. But I think a common mistake from traders is that the grass is always greener on the other side. They don't give them enough time for that profitability to flourish and to that market character to develop. And once they are not profitable the first month, they change strategy and they restart the cycle.
Yeah, there's a maybe it's Dunning-Kruger, I may have made that up, but there's a word for this, and it's basically the cycle that a lot of people follow that leads to their downfall. And it's basically you see a new opportunity, SMC. You think, oh, this is going to work, this is crazy, these guys got payouts, these YouTube videos are amazing. So you have uninformed optimism. So you go in and you don't know what it is, but you're very hopeful and optimistic, and you're like, I'm excited. You have a lot of passion and energy. Then you go and study it, you spend a few months, and then you take a bunch of losses, you're like, oh, okay, I'm informed now. I'm not uninformed, I've learned, I'm informed. But if it went from uninformed optimism to informed pessimism, I'm like, okay, this is harder than I thought, this is not working. I don't know what to do. Let me keep going because I saw the results of others. And then you keep going and you're not getting the results. You're 6 months in, now you're frustrated. Your friends are thinking, what are you doing? Your family's questioning you. And then you enter this valley of despair. The valley of despair is a very common place. Everyone ends up. And the easiest thing to do is retreat to your comfort zone. Let me go back to my friends and hang out. Let me go back to university and follow the path in front of me. Let me just strategy hop and try the next shiny object. And then you end up going from valley of despair to the next thing, which is now uninformed optimism. New strategy, new technique. And then you go through the cycle again and again. Now, the reason I mention this is because this is very well documented. I've done it in my life. I think everyone does this to an extent. But it's your job to catch yourself and realize, I got it from the book Mastery from Robert Greene. It's a very interesting exploration of what mastery truly is, and it's a topic we can speak about because trading is a form of mastery. But the key thing here is like that typical 10,000 hours. Now that's a statement we hear online, but what does 10,000 hours mean? So number one is if I'm following this valley of despair loop and I do 1,000 hours on this strategy, 1,000 on this, 1,000 on that, and then I jump to the next thing. I'm okay, let me try AI, then let me try this, and actually they're not working, let me come back to trading. You spend 10,000 hours, you put in the effort, you put in the hard work, years have gone by, but you only achieve 1,000 hours in each thing. But if you just collected that 10,000 hours of that in one thing, you'd have so much compounding growth and information, serendipity, you'd learn so much more. So it's also distributing consciously your time to know, okay, what is something that is no longer serving me, something that is flawed, something that is not working and is justified to move versus I'm in the valley of despair. You know that picture of like someone digging for gold and he's this far away and he's like, I'm not going to get it. And the gold was right there. You never know how far you are away from this. But mastery in general, if we get into it, is not 10,000 hours. I believe it's 10,000 reiterations. It doesn't have to be 10,000, but it's this idea of repeating doesn't lead to results in the market. In the gym, yes, you go and work out every day, you repeat and repeat, and over time you get progress. But if you take the same behavior every day in the market, you will take loss after loss after loss. And I've seen people that come to me and say, hey, Waqar, I've been trading for 10 years and I haven't made any money. I'm like, you've been trading longer than me. What is the difference here? The difference is you did the same thing for 10 years, hoping for a different result. I realized very quickly I have a testing process. If something doesn't serve me, I move on. So I think in the market specifically, it's not 10,000 hours, it's 10,000 reiterations. The quicker you are to learn and pivot and feedback loops inside, the ability you have to shape yourself, to learn your personality, to learn all these things to then navigate towards mastery.
And I think that's a excellency skill to have, the being able to do the same thing repetitively, even though if the results are not there, but you stick to it, and eventually what happens is that the results in trading are exponential. The first years you're not making, you are building up your portfolio, but once you have 1 million in funded accounts or in your personal capital, and then you make that year 30% on a year on $1 million account. It's 30K a month. And if you were 2 years waiting for that and you still divide in 3, so it's 7K, for example, or 8K that you will be making in the beginning since the first month, if you compound it through but you don't see it until you don't connect the dots in life, you connect the dots backwards.
Exactly. Yeah. I mean, I completely agree. Just to put it into context, first of all, is this topic of leverage. So the 1971 situation that I mentioned earlier in the show, the conclusion of this whole exploration of, okay, salaries go like this, cost of living goes like this, inflation, tax, everything goes up much faster than the rate of your earning power. So if you're doing time for money, if you're just exchanging your most precious resource, which is your limited life, just for a token, what is different to slavery then, actually? In this day and age, if you cannot get the freedom that you want from your time, you can say, okay, let me earn more with my time. Let me get more qualified. Sure, you will be in a comfortable situation, but comfortable is not the same as sovereign, independent, thriving. And if you want financial freedom, time freedom, geographical freedom, you need to work with leverage. And now there's 5 forms of leverage. Naval Ravikant very beautifully explained it in his book. I think everyone should read that book. Everyone talks about Rich Dad, Poor Dad, and I think that's a waste of time. Really, these books are not worthwhile compared to Mastery, Robert Greene, or Naval Ravikant's series. But anyway, in this he talks about the greatest way to grow in life is 4 forms of leverage. I added the 5th, but it's labor. If you're comparing yourself to Elon Musk, if I came and I invented a better car, electric car, and it had better battery, better features, better everything, I can never compete with him. And even if Elon is on the beach every day, he has 150,000 employees. In a given day, he's getting hundreds of thousands of hours of work done when he does nothing. This is leverage, labor leverage, capital leverage. He can now invest in all the startups, all the infrastructure. He has leverage like this. And then you see, okay, why has Elon Musk bought Twitter, X? Is it because he really believes in freedom of speech, or he's realized having a social media platform to distribute his narrative, influence, and online global presence, influence, and a personal brand is a form of leverage? Just look at it. Who has more followers? Is it Tesla or Elon Musk? Is it what is it, Steve Cook or Tim Cook? Tim Cook of Apple. Apple has less followers than Tim Cook. So why is Ray Dalio, multi-billionaire, hedge fund manager, all of these things, why is he making YouTube videos? Okay, personal brand has its importance. So when you look at the leverage of code, which is just SaaS companies, tech, AI, you can now outperform someone just with leveraging code. If you have capital, you have labor, and then personal brand. And then the last one is market, which you just mentioned. You can take the same trades, the same strategy, the same 3% in a month, but you let the capital, the account size, the prop firms do the heavy lifting. So a trade today of 3% might be $100. In a couple of years, it might be $100,000. And just to give my own story on this, 2015 I started trading, like everyone, a bit lost. By 3-year mark, I made at the end of 2018, I made my first $100,000, and that's a huge milestone. And I felt like the man. Now this year, my first profitable year of grind and sacrifice and fighting the market and there every day was engulfed by the last month, where I took 2 trades, and they were both A+ setups. And I was less focused on the markets because of my stock performance, stock market investments, my business, my podcast, tours. I was traveling in New York. I was doing so much because I'm using all 5 forms of leverage, but I still outperformed my entire first year in a single month in trading. This is leverage, and it just goes to show it's not linear, it's exponential. That is the beauty of this game. So I wouldn't even focus on my first 5 years on money, because you will make it the entire first 5 years in one trade at some point. So who cares at the moment? Take your time for the skill set.
Totally agree. That was a great explanation. You've been posting trades publicly for about more than a year, 19 months.
Yeah, I started in November 2023, so more than a year and a half.
Nearly 60% profit. How that journey has been, and how is it to trade publicly? Because we all see in social media some results, but not so many traders, they expose themselves on every trade.
So it's a long journey to explain, but there's a lot of lessons in each month, actually. So first of all, the strategy of doing it. So when you come to my stage of performance, it's like someone going to a funded account. Phase 1, phase 2 evaluations, who cares? You blow it, you buy another one. But the big moment is I've got funded. Now it's time to perform, because now it's real. So I can compare that feeling to what I did was, okay, I'm now going to perform publicly. Some of my tweets have 200,000 views. Most of them have 50,000 to 100,000 views. So when I'm performing to that extent, the public eye, the comment section is there. So now it's go time. And I realized on this journey, okay, I have to follow it like a new account, like a funded account. I'm not going to start off with all my trades. I'm going to start off very conservative, very slow, because I don't want to start off negative. Because if I start off performing in the public eye and I have 5 losses in a row, I'm going to feel embarrassed. I'm going to have psychology issues. My reputation, like all of these things, that's not what I want. So I started off with my A+ setups, and I started off taking 1 trade a week or 1 trade every 10 days, super slow, super conservative. The goal here was to build a profit buffer. So the first few months, November, December, January, A+ setups, slow conservative gains. And these setups have a 70 to 80% win rate. So this is nice for me because I can be controlled, slow, and also my brand is protected because I have more wins to show. So eventually, after a couple of months, around the 20 trade mark, this is when I achieved around 15 to 20% profit. So now when I got 20% of my account in profit now I'm like, okay, I've built the profit buffer. I can afford losses now. Now let me, in a controlled way, bring my win rate down. It was at 75%. Let me manually bring it down to 60 to 50%. Why am I bringing down my win rate? It's because I want to introduce other setups, not just A+, but A, B+ setups, sometimes counter trend, sometimes without a POI, because I want to increase my rate of return. My trade frequency went up, my win rate went down, and overall my performance, the goal is to grow faster. So, and it worked. So I started to introduce these setups, and I went from 20% profit to 40% profit really quick. And that's when I felt really good. And I remember in this period, I would have losses because I'm still running on a 60% win rate. And it's funny because then I see someone who joined my signals today, and I take a loss today. And he's commenting, Waqar, no, you took losses, you don't know what you're doing. Or when I take a trade, someone's commenting, you're going to take a loss here. This is wrong. And I'm reading like, people are disagreeing with my narrative, and then they get angry with me, and then it plays out.
But that's liquidity.
And then my liquidity, let's say. But it's also interesting to see, for me to observe, the fragility of people's emotions in the comment section. People are like panicking. Oh my God, we're in drawdown. We're about to hit stop loss. I'm like, calm down. I have a 5 pip stop loss. If we're 3 pips in drawdown, yes, we're hitting stop loss, but it's a 5 pip stop loss. You're always close to the stop loss. But it's just seeing the new traders and newbie people that are just blindly following how fragile they are. It was interesting to me for just observing this, or just for someone to say, okay, I followed you today. I took 2 losses with you. He's down on his accounts because he just started with me, but I've been doing this for 6 months now, so I've built the profit. So it's an interesting narrative here. But the interesting story was July 2024. I made a YouTube video on it with the MyFX book and everything. And these are live callouts. So I'm giving the entry, stop loss, take profit explanation. I'm tweeting it before the trade. And then as the trade is happening, I'm like, guys, let's break even now. Let's take a partial here. I'm giving the full commentary, so nothing can be faked. And, there is skeptics, but if I edit something, if I edit the tweet, it literally says edited. You go on any tweet, you can see the timestamp of when it was posted, and then you can check you can even see on my screenshot the time on my iPhone, or you can check the time on the Marcus. Everything here, it just simply cannot be faked because it's ahead of time. Anyway, there was one point where in July 2024, I have a take profit portfolio of 1 to 3, 1 to 10. So I always take 50% of my volume at the 1 to 3 risk reward, and I close the full trade at 1 to 10. Now, for me to hit 1 to 10 risk reward is not often. It's less than 50% of the time, which is something I learned, and we can talk about it in a moment. But these 1 to 10 trades that were the big trades for me, they would happen once every 2-3 weeks, so pretty rare. But just by chance, I got 2 of them in a single day, and then the next day I also got a 1 to 3. So in a 24-hour period, I grew my account in the public signals 18%. So this was a high of all highs. The comments were crazy. Everyone was calling me the king and the goat and all of this stuff. 3 days later, I took a loss and the comments were not the same. But the point is, like, the euphoria was there. So I was like, perfect. I made a lot of money. I showed the MyFX book. I showed the Brokersing Journal. I showed the live call out. Here's the proof. Now, I didn't know this at the time. I learned this 1 month ago. If anybody puts on Google and they type in probability of losses in a row calculator, or probability of wins in a row calculator, if you put this into Google, you'll get this nice spreadsheet, and you'll realize the probability of you getting 6 losses in a row, 7 losses in a row, depending on your win rates, you realize the numbers are very shocking. And for me, and I'll get into this, but this is the euphoria. This was the high moment, and this was in July. Around end of August, September of the same year, just a few months later, I was now, okay, my account is sitting on 50%. I've got a huge profit buffer. The comments are loving me. I'm feeling good about my trading. Now it's time to really grow this account, not blow. Now it's time to really go hard and blow it up. It's time to go aggressive. I got 50% buffer. Everything's going good. My reputation is good. Now it's time to manually bring down my win rate to 40% because I can afford it. I've got so much profit in the account. Why not control my win rate down to 40%? Because I have a positive risk reward. So 40% is not a problem. But this means I can trade almost every day. This means I can introduce all kinds of trade setups that I have and really go for this high rate of return. And you might be thinking now, well, 1 year ago you were on almost 50%. Now I'm on 59%. So what's gone on here? I'll tell you the story. So now I'm approaching this aggressive phase, and I think this is important for every account. To really scale, you don't just follow A+ setups all year. If you want to scale, you either scale your risk, you double your risk on A+ setups. This is what a lot of my guests do. That's not for me. It's not my psychology to now put 3% or 5% on a single trade. I would rather increase my risk and rates of return through setup types. So I'll introduce more risky setups with risk management. So when you increase your trades frequency, you increase all of these things you're doing, you expect an increased output. And I'm doing this now. And it gets through summer months and everything is actually going fine. And then I take a loss. I'm like, okay, normal. And I was like, on to the next trade. And then I take a second loss. I'm like, okay, on to the next trade. Every time I write, on to the next trade. And the comments are good. Like, everything's going fine. We're still up. Everyone's happy. Keep going, 4 losses in a row, 5 losses in a row. I'm like, okay, something's not going right here. Now the comments are changing. Now the comments are like, why are you taking these trades? Waqar's lost his senses, and all of these comments were coming. Next trade, 6th loss in a row. Like, okay, this is getting a bit embarrassing now because the comments are getting aggressive. My neck is on the line, and now it's for more than 1 month that I've just taken losses. Now I thought, you know what, let me calm down. Let me take 2 weeks off. Take 2 weeks off, clear my head. I take the next trade, loss. 7 losses in a row over 6 weeks. So now these new subscribers, these new people that are following me, I'm talking about, I've been doing public signals, 50% up, but everybody's just seeing loss, 7 losses in a row. I was like, okay, this is not going well. So then I thought, okay, I don't know what's going on here. I didn't feel like I was doing something wrong. I was following my plan. All of these trades were normal trades for me. It's not like, and I know the market doesn't change so quick that an edge disappears randomly. So I was like, okay, something is going on here. Let me take another 2-week break. So I take a 2-week break once again. I come back to the market. I'm like, okay, I got to make sure I get this right. So then I think, okay, let me stop doing these 40% win rate trades. Let me bring my win rate back up to like it was a new account. A+ setups only, slow, conservative, to build back my confidence, build back the comment section, and build back this account, because 7 losses in a row is a drop in equity. And then eventually that 8th trade was a win, but it was only a TP1. So it was a 1 to 3 risk reward. I take a partial, I gained 1.5%. Now, the story here is, in a 3-month window, I had the euphoria of 18% in 24 hours, my FX book, and then 7 losses in a row, and a tough period. And I want to mention now, the reason I'm bringing this up is, how did I react? How did I compose myself? And what behaviors did I follow? So looking back on this, a lot of people have different reactions. You can have a fight or flight response. So the fight response is, okay, you know what, I'm going to win it back today. And you clash with the market. Let me take all kinds of trades. And you can either have a home run and it works out, or you spiral into back to zero blown account. That's the fight mentality. The flight mentality is, I've spoken to one professional trader, James Thorpe. He was responsible for managing hedge funds. His job was to manage trading floors. So he is literally the mentor of your mentor kind of vibe. And he has all the knowledge, all the experience, all the data. He went through a calamity where he went on tilt one day and lost a lot of money on the hedge fund. And he was so paralyzed by this, he was so emotional that he didn't trade for 3 months. He couldn't take a trade. And then the hedge fund boss said to him, James, just go to the market and make $50. Build back your confidence. So he went into paralysis flight. I would go into fight. And other people usually go into one of these two things. Knowing this, in this period when I had 7 losses in a row, I realized, okay, I need to take time off. But what do people usually do in a losing period? Let me reduce my risk. I usually take 1%. I've taken 7 losses, 0.5% risk per trade until I build things back. This seems like good advice, but it's a problem, because when I look back at this table that I mentioned to you, if you put it into Google, you realize if you have a 70% win rate, if you have a 50% win rate, the chances of you having 7 losses in a row across 100 trades, it's very common. It's, I think if I'm not wrong, 33% chance you'll have 7 losses in a row. So when you think about it, in 100 trades, there is a 33% chance I will take 7 losses in a row. How about 6 losses in a row? About 54%. So when you're realizing 6 losses in a row with a 60% win rate, which is a good win rate, the chances of you taking 7 losses in a row is going to happen. Everybody should be prepared. But remember, at this time, I lowered my win rate to 40%. The chances of me having 7 losses in a row with a 40% win rate, 90% chance. This was guaranteed to happen. I just didn't know it. Now, when you look at the probability of 8 losses, 9 losses, 10 losses, it gets less and less and less, to the point where if you have a 80% win rate, the chances of 9 losses in a row is 0. So when you realize, what was my behavior? I took a 2-week break to compose myself, to come back refreshed. Correct thing to do. I come back to the market, I didn't reduce my risk, because if I reduce my risk and the next trade as A+ setup is a higher probability to be a win. I have a higher probability to win, but if I took half the risk, now instead of me taking 5 trades to recover, 7% down, 3-4 trades, maybe 1 loss, 5 trades to recover. Now I'm doing 0.5% risk, 10 trades to recover. What became a 1-month period of recovery became a 2-month period of recovery. Now, what is worse for your psychology? Following 1% risk, or improving it by following 0.5% risk? Okay, you got to win here. But now, is it harder to manage 1% risk, or is it harder to be in drawdown for 2 months? I think it's harder to be in the hole for 2 months, especially in my case with the comment section and my reputation. So I realized this data was pivotal to know. If I don't know how often I have 5 losses in a row, 9 losses in a row, it's hard for me to navigate an account. But now that I know this, I'm like, okay, 7 losses is a guarantee, is going to happen. 8 losses is not really going to happen. 9 losses, it's very, very unlikely. And if I have a high win rate, if I move my win rates depending on my performance, there's no reason for me to reduce risk. So I kept my risk. I followed A+ setups and I bounced back. I recovered the 7 losses and I continued on. And I think just this whole documentation of 1.5 years of trading, it has all these lessons of how to start an account, how to grow an account, what to do in a winning period, losing period, recovery, how to follow risk management, profit-taking systems. It's a full display, and not only did I document the trades and the ahead of time, I've shown all the case studies as well of what was I thinking, what trade types. And I think for me, this was a big project to not only show what's possible. Looking back, just look at the KPIs. 18 months, 59% gain. Quick maths is like, that's 3.5% per month. And I consider that very good performance. So when you come to a prop firm environment, why are we chasing 20%? Why are we chasing these home run trades? Why are we chasing 5% risk? Because that's the daily drawdown. Why not? If I didn't do that in 18 months, and I had a great performance in the end, you don't need to do 5% risk in a trade. Protect your stop loss, protect your daily loss and max drawdown. Because in the end, 3% per month is very achievable. I showed it. I did it publicly. I had my calamity period of 7 losses. I had my euphoria moment of 18%. And if you have the 18%, congratulations, you had a big payout. But that spike is no longer the new normal. You have a trajectory, and this is your true North Star. This is called your edge. You cannot lie to your edge. Your edge will always reveal itself. So it's called regression to the mean. If you have your mean, which is I average 3% a month, and then 1 month I did 18%, it will regress back to the mean and probably go down at some point, because the average will always be the average. I cannot hide from my edge. My edge has shown me 3% per month for 18 months. And if I realize if I had $500,000 in funding, $1 million in funding, 3% per month is $30,000 per month. That's more than enough. So we do small, consistent, conservative gains and let the capital do the heavy lifting. 3% per month across a year, your life is changed, and you are following conservative trades, risk management, peaceful, psychology intact. You can still enjoy your life. And at the same time, I'm doing all of these public signals. I'm building the podcast. I'm building businesses. I'm traveling every single month. The same year, 2024, I did 36 flights. So life is chaotic. Business team, I grew from like 10 employees to 50 employees. So life was going on and the markets were still functioning. I think this whole 2024 chapter of the public signals, I think, symbolizes so many meanings, which is why I encourage people to just go through that documentary and go through everything that I did, because there's so many little lessons you'll learn from my journey of 10 years of experience.
That's great. Definitely will be in the description. So check that documentary out. Why did you do this? You have a very strong personal brand, one of the biggest podcasts in the world. You have businesses that generate you millions of dollars. Why risking your reputation posting public trades where in an industry where you know for a fact that there are people that even they are probably making even more by selling courses and they are not as transparent as you are?
Yeah, so this brings me back to even why I started the social media journey, which was only 2 years ago. Before 2 years, I just had Instagram and I wasn't doing daily reels and stuff. It was just a normal Instagram. 2 years ago, I did a boat event. I invited some people in JBR. I just rented a yacht there. And you know how it is. You invite 10 friends. They said, can I bring a friend? And next thing you know, it's 50 people. But they were all traders, because I think there was an expo going on at the time. So we had 50 trading influencers all on this boat. Now, I was not a known on social media guy. So I invite all these people. They're all coming up to me. And I didn't know a lot of them either. I'm shaking everyone's hand. I'm getting to know them. And I'm quickly checking, who are these guys online? And I'm seeing around, this guy's on TikTok, 18 years old, 100K followers. Another guy, 19 years old, 100K on YouTube. Another guy, 17 years old, 200K on Instagram. I'm looking around like all of these guys are kids. All of these guys don't know about life yet. They don't know enough about business yet. They don't know enough about the markets because they've been trading for 2 years, but they have a personal brand and they're killing it. They're making hundreds of thousands per month from their whatever, courses, signals, whatever they're doing. And I used to look at it from a place of pride, maybe arrogance of I don't need it. I don't need social media. I don't need that stuff. And then back to what we were saying earlier, if Elon Musk is focused on social media, if Ray Dalio, if Warren Buffett, they're all doing social media to an extent. Legacy media is dead. Online brand is the new currency. And these kids are winning. So instead of me now saying I'm better than that, I thought, you know what? I think I'm better than you at trading. I'm better than you at business. I have more life experience than you, and I have money. I can compete. So then I thought, you know what? Let me give it a go. But instead of making something out of nothing, which is what a lot of these influencers do, they start off at their parents' bedroom and they start making TikToks and they hope they blow up and then they change their life and they buy a Lambo. I thought I can already do all of this. Let me bring a team. Let me bring infrastructure. Let me bring studios and let me try this properly. But I didn't have a competitive edge. I'm not necessarily an entertainer. I'm not a TikToker. So I was like, how can I compete in this domain? So I thought the only way I can compete is maybe my experience, my stories, my ability to articulate my thoughts, because you can't hide that. You can't hide real insight and real experience. So I thought that's my competitive edge. But at the same time, who's going to care? Who's going to watch me? I'm just a new guy online. You have to earn your rights. You have to earn your reputation and you have to play the game. So I thought another competitive edge is just transparency. If these guys don't have it, I'll have it. So that's when I showcased, okay, here's proof, here's undeniable proof, here's something, a challenge that no one is doing. And the reason I did it was it's an exchange. I gave value. People through my public signals got payouts, got funded, changed their trading beliefs. In fact, just yesterday, I'll send you a screenshot. Someone commented on my video, hey, Waqar, I've been following your stuff for 1 year. I'm now $300,000 in funded and I made a $30K payout. He's 18 years old. He's never paid me $1. I don't even know who he is. But I realized when you have this Alex Hormozy approach of you give. And then when it's time to ask, you don't ask for things. You keep giving. You do this for 2 years, which is what I did. At the end of those 2 years, you walk away with a legacy. You walk away with a brand. So I did this to have this asset of a brand. Now I can come on the internet and people will listen because, okay, this guy has showcase proof. He's documented experience. He is now worth listening to. So it was an exchange. I give this value. I give this transparency. In result, I get people who listen to me. And then that interaction continues and I can build things from it. So I knew very well this was the goal and I knew it was going to be a challenge, but the reason it's worthwhile doing is because it's hard. And in the end, to be honest, it wasn't as hard as I thought. I think I enjoyed it. I think having that pressure made me stronger because now I have an extra lens. I'm not just trading for myself. I'm thinking twice before I post. Before I press post, I'm like, is this a good trade? Are you sure? Because the comments are going to come in 30 seconds if it's not good. Post. Because you're having that accountability. So I learned a lot and just these few insights that I've learned along the way of don't reduce your risk in a losing period. Knowing in your edge how many losses in a row you'll take on your win rates. These lessons I learned in the process. Another thing that I mentioned earlier was a big lesson for me was I realized I'm doing this 1 to 3, 1 to 10, TP1, TP2, and it's fixed. The reason I did it was based on I took 1,000 trades that I took and I found optimal levels. Despite what I did, this was optimal. It told me 1 to 3, 1 to 10. What I realized in this 18 months was the amount of time I hit 1 to 3 was very often, very, very often. And in fact, because the 1 to 3 is a reaction trade, the average London volatility on a euro dollar is 20 pips. With a 5 pip stop loss, my TP1 is 15 pips. So that London impulse, that London reaction, usually I'm capturing that 1 to 3 risk reward. So I was getting, even on trades I was wrong, I would take the 1 to 3 and break even. 1 to 3 break even. So there were certain weeks in my public signals, I was wrong all week. All my trades went in the opposite direction, but I break even fast and I take a profit fast. So I realized I'm wrong every day, but I walk away with 3%. I walk away with 5%. So when you can take a profit from the market when you're wrong, it's so powerful because when you're right, then it's when it grows. I learned this in the public signals about myself. Another thing I learned was the 1 to 10. It was not coming as often as I hoped or as it used to. So usually the 1 to 10 would be 1 in every 3 or 4 trades. I started to realize in the public signals, it was 1 in every 7 trades. It was 1 in every 10 trades. So I started to realize this 1 to 3 and 1 to 10, I'm leaving too much on the table here because it would be more profitable if I took full volume at 1 to 3 and captured 3%. Because right now I'm getting 1.5% and then break even. So then I realized, okay, I need to divide my trade models into which trade model do I have full volume at 1 to 3 and which trade model do I have full volume at 1 to 10. And I realized the A+ setups, the ones that are with the trend, with a lot more liquidity, they have a lot more fuel. They have more reason to go further. These trades, I'll take the 1 to 10. But my 40% win rate setups, the counter trend, the hedge setups, the outside of the key time window, the ones that are non-POI, these ones don't have the potential of 50, 60 pips. These have just a reaction. So with these reactions, I take full volume at 1 to 3. So this is a new thing I learned from the public signals. And I implemented this into my trading and it's affected me positively. And also from the podcast, another thing that I learned this last month, in the month of June, I made $93,000. It was one of my biggest months. I took only 2 trades, only 2 A+ setups because I was traveling. And I learned from a lot of my guests, a lot of them just say on your A+ setups, double your risk, do 2% risk. If you have high conviction, it's a high quality setup, why not? Because 2% is not crazy as well. I just had a very rigid belief, that's not my style, it's not my personality, no, I'm not going to do it. But after listening to people for 2 years, and a lot of people are talking about this, I thought, you know what? What's the harm? Let me give it a try. 2% risk. It's not the end of the world. So I did it. In last month, I had 2 A+ setups. I doubled my risk, 2% risk. So I took $10,000 risk on each trade, and they both happened to play to 1 to 10. So it ended up being a huge month for me. And my first profitable year in 2018, I made $100,000. Last month, from 2 trades, effortless, easy setups, whilst I'm traveling, $100,000. But the key here was I knew how to now manage my profit-taking systems based on the setups, which is what I learned last year. I learned how to modulate my risk based on setup types. So these are new things that I'm learning even at the 10-year mark. But trading became exponential, became more effortless. And a big thing that I wanted to share today, which I haven't mentioned online yet, we saw the tariff situation happen. And a big mistake of mine or regret of mine, I didn't start investing sooner. In fact, my younger brother, I was with him in London just now, and I asked him, are you investing anything? And I know the answer is no. And I said, why not? He's like, oh, because I'm a university student, I have no money. I was like, okay. I put it in his ChatGPT. I said, he's 22 right now. I said, if from the age of 22 to the age of 60, I asked him, if you invest £100, but let's say dollars, if you invested £100 per week, every week from now until the age of 60, how much do you think you will have? He said, maybe 100K, maybe 200K. I was like, I put it in ChatGPT. The answer was 1.6 million. $1.6 million, meaning to say it's a guarantee you will be a millionaire by the age of 60 if you just do $100 a week. Now, that's the age of 60. That's long, but the principle is here. There is no excuse. There is no excuse. Now, $100 at the age of 22 per week might be a lot, but at the age of 40, when you have a good career, let's say, you're going to maybe 2K a week, 1K a week. You don't know. So the point here is it's a low number. Everyone can get involved. The way to win is time. The younger you start, the better. I started a bit too late, but I thought, you know what, this year I've got enough liquidity around. Let me sell some watches. Let me get rid of this bullshit and put it into the markets. But I saw this tariff drop. I'm like, these drops happen periodically. They happened in 2008. They happened in COVID. They happened around Brexit. They happen now with the tariff situation. This is time to make big money. But our job as individuals is just to be ready for these moments, because this is an opportunity to make crazy returns in a quick amount of time. So I'm not seeing the market is crashing. I'm not seeing the US economy is going to shit. I'm seeing the market is on a 20% discount, 20% off, Black Friday sale. So I decided, let me sell some things, plus with the liquidity I had. And this would put me at about a 7-figure investment into the stock market. But I thought this is the time to really go aggressive. I've been earning for years now. This is where I make it count. So I decided I had a certain figure in my trading account, and I realized I'm never in two trades at the same time. I'm usually only 1 trade per week, 2 trades per week. So let's say I have $1 million in an account and I'm doing 1% risk or 0.5% risk usually. I'm not using a lot of this capital. This capital is just sitting here. So I'm not using my free margin. So instead of 90% of my capital just sitting there with no function, not earning me anything, I can use with leverage, obviously, 10% of my account size and trade the same lot size and trade the same risk. So meaning the remaining 90% of my account is just sitting there. It's not serving a function. So I decided to withdraw this and let's say my average risk is $4,000 or $5,000 per trade. I don't need $1 million to execute a $4,000 risk. Right. I don't even need $200,000. So I realized, let me pull out about $900,000 from my account and I put it into the stock market. So I realized I can still trade my $5,000 risk. Now my risk as a reflection of the account, okay, it's like 10%, 20%. But as a dollar amount, compared to my accessible liquidity, it's still with risk management. So I didn't increase my risk. I didn't increase my riskiness or exposure to the market. I just took 90% of my margin that has no purpose and put it into the stock market. Now, I wasn't expecting a V recovery. I was expecting maybe a 1-year, 2-year recovery. But I know in general, the things I bought, Tesla, Nvidia, Meta, the S&P, I bought some gold, I bought some Bitcoin, which now just went to all-time highs. I diversified my portfolio and my average return after 2 months is about 16%. So we're talking multiple six figures, and I did nothing. I did no work. In the last 2 months, I made multiple six figures without lifting a finger. This is the power of compound leverage investing. The only edge here was I spent a decade building myself to have the liquidity to then strike when the market is showing me an opportunity. And I think the little trick here for me was also taking liquidity from my trading account that has no function, and I put it here into the investing account. And now let's say I have a terrible period on my trading account and I'm getting into low liquidity or margin call. I can now, these assets are very liquid. I can sell my Tesla shares instantly and then I can fund my trading account. So I thought this was a very safe way for me to grow. And the benefit was, the reason I took only 2 trades last month, not only because I was busy, is because if I'm seeing my portfolio go up 50K, 100K, I'm refreshing every day, another 10, 20K, I don't have this itch to go to the market. I don't have this urgency. So now I can be really relaxed and really focus only on A+ setups. So me having investments not only made me a lot of money, passive income, it also improved my trading and also optimized my own finances. And I think it's a big lesson. For me, I learned so much in this two-month period of like our job as individuals to be really having freedom is, number one, explore leverage. Any one of the 5 forms. Prop firms is a form of leverage. Grow your capital, grow your base. And when the market presents you an opportunity, strike hard and do it in these kind of ways where it's conservative, it's protected, where you have gold and the S&P for the safe, not sexy, conservative. And then you have the Bitcoin and the Tesla for more of the, okay, let's get 40% gain here. You have a portfolio. You allow the portfolio to do the heavy lifting. You give it time, because in 10 years, this portfolio will be worth double. It's just market laws. And I'm in a position now where I have multi-7 figures in the market, meaning to say, if I stopped everything, I disappeared, I know I'll make almost 100K a year without doing anything. This is financial freedom. What was the benchmark? At least $2 million invested. Now, 2 million is a big number, yes. But if you give yourself 10 years and you work with leverage and you work with prop firms and you build all these things, $2 million is not a big number. And you can be financially free within 10 years. And that is the real goal. And the option or the alternative is what? Go to university, get a job, get a degree, 9 to 5, time for money. And maybe one day you can afford a deposit and a mortgage. You have no freedom, flexibility here. This path is worthwhile chasing, because my 10-year journey has brought me everything. And it all started from a university student.
And that path also is not only that you're stuck or there's no growth. Inflation will eat you. Your salary will keep the same throughout 50 years. But the power of
your buying power is going down. You're actually getting poorer in real time.
Way more poorer. It's awesome. I really loved about you that you reply the questions before even me answering. It's like you say a topic, and I'm like, oh, this is a good topic to ask these 3 questions.
And then I answer the next one.
And then you answer the next 3 ones. I'm like speechless sometimes. But it's great. And I think that's also a very good statement that in 10 years you can be financially freedom. It's totally true. But you are saying it on a 10-year basis, as opposed to what you can see in social media, which is in 3 months you can make 10K.
Yeah.
And
the key here is that it's not, you don't say, okay, in 10 years you can make $3 million. That means 300K a year. No, your first 3 years will be nothing. And then maybe you'll make 50K, but then on year 8, 9, 10, you'll make $1 million, and you'll be like, what happened here? And now when I look around in my life, I'm working less hard than I used to. I consider my hard work days is when I have clinics, exams, case studies, presentations, business, trading, learning, backtesting, journaling, all these things that I'm doing, and stressed and lack on sleep and social, like a sacrifice. That was a sacrifice period. Now I have a team of 50. They work for me. Anything that I don't want to do, I can pay someone to do it. So now I do things that are my strengths. This is now, as you said, a leverage. I now have investments that bring me more money than my first year of profitable trading. Leverage. I can now use my brand to build businesses. Leverage. I can now have years of experience, years of market IQ, more experience and leverage in the market. I have now spent 10 years or 5 years establishing myself in Dubai. The podcast has bought me a network. I now have every kind of person I want to contact. If I need advice on this, I have a friend. If I need advice on, hey, I'm going to New York, can you connect me with someone in the stock exchange? I have a guy for that. So I built my network, I built myself, I built my mind, I built my psychology habits. And these are all leverages. So life and growth will not be linear. When you follow these kind of paths, 10-year will not be linear. It will be crazy exponential. If someone told me 2 years from now you'll have 100,000 on a podcast, be like, it's not possible. It's not doable. But leverage happened and things came together. Team helped me, infrastructure helped me, equipment that I could afford helped me be able to fly to New York with a team, pay for hotels, and all of these things is leverage. The answer to everything is forget the old path of time for money. It doesn't work anymore. You have to follow leverage path. And the leverage path, there is 5, and inside each one of these 5, there's leverage inside of it. You have leverage of the markets, but inside it you have leverage of information, leverage of mentors, leverage of prop firms. So each one of these has leverages. And when you live a leveraged life and give 10 years, which is not a long amount of time, it's hard not to be free. I would be shocked if someone actually followed paths of leverage, gave it 10 years, and they were in a worse situation. I just don't think it's possible. And I look at your life, it's the same thing. You followed leverage, and you use all 5 forms of leverage. And all of these things over time have bought you your freedoms and bought you your success. This is the new age blueprint, and you look around and you see if the billionaires are doing this, if Jeff Bezos is doing it and Elon Musk is doing it, you can do it too.
That's literally what I think when I encounter this, when I encounter any problem in the company or that I need more time, and I think about companies having 200,000 employees, and I'm pretty sure the CEO, he has the same amount of hours as I do, but he's using other kinds of leverage that I'm not using, and how one human, the same species of mine, is running multi-billion-dollar companies.
So what I learned this year is your job and my job as a founder or a leader or whatever the term is. Your job is no longer to be a doer. Your job is no longer to work, because your job every day is to look at your calendar and say, what am I doing here that I can eliminate, delegate, or automate? If there's something that I cannot delegate or cannot automate or cannot eliminate, I have to do it, because I'm the only person that can do it. But then you decide, out of these things, is this going to feel like I'm working and feel good for me, or is this going to move the ship? Is this going to really move the needle? And then these are the things that you can do and only you can do. And you look around and be like, okay, my day just means I speak to my team. My day means I prepare events. My day means I learn about management and leadership and speaking, because this is my leverage now. And I look at yourself and I'm thinking, okay, no problem is really doing events like you're doing. And I join you in your September event. And all I'm seeing is it's expensive, it's infrastructure, you filmed a documentary, it's time, it's effort. And what's the point? Like, no one else is doing it. You're not making money on the day. Well, I'm seeing, okay, well, deep-rooted, this is leverage. You're now building a community. You're meeting people. You're showing people there's an element of trust. I'm here. This is all leverage. Now, it's not visible leverage, but it's a leverage of trust, a leverage of community, a leverage of brand. You're doing it maybe even without knowing it. And a big decision that I made from again, Naval Ravikant's is that when you're in these stages of life, it's a position of luxury, but you have to change your approach. To be saying to yourself, what is worth my time? And is it worth my time to, hey bro, let's go for a coffee and catch up? Not worth my time. If I value my time at, let's say, $5,000 an hour, the coffee is not worth it, the hangout is not worth it, these things are not worth it. What is worth it? Now my life actually is the opposite of what it used to be. I have no routine. I have no calendar. I have no meetings booked in. If my team wants to reach me, they know. They send me a voice note. If I'm free, I'll reply and I'll say, let's jump on a call now. If I'm not free, I won't reply, because I'm in the position where I can. But I expect them to do a daily call. I expect them, because this is the difference here. The reason I have this complete flexibility is because, let's say I decide every Monday morning, me and my C-suite will sit and have a meeting. That means you have a 1 hour period to have curiosity, serendipity, creativity. You cannot box creativity and ideas like this. Now, instead of having a one hour meeting to explore, my life is now to explore. If I feel like reading a book, I'll read it. If I feel like I'm done with this book and I want to try this one, I will change. If I feel like, hey bro, I want to hang out with you. I texted you the other day, we met at 11 randomly with like 1 hour of notice, because there was flexibility there. You texted me yesterday, hey, let's do a podcast. My day is free, so I can just come and say, hey, why not? Let's do it. This flexibility in life is our job as founders, because we need to have a creative mind, open mind, and freedom to express anything. And this actually comes back to the book of Mastery by Robert Greene. He said, and it's so amazing to really think about it, when you're a child, you have what he calls a flexible mind, basically. It's like, if there was a child here right now, he would jump on the table, he would scream, he wouldn't understand the etiquette of, it's a podcast, let's be quiet, let's watch. The child doesn't know this. But as a child goes through life, they get more conditioning. They get told, okay, when you're at a table, you sit. When you're in an aeroplane, you don't cry, you don't shout. They learn etiquette. In a cinema, you be quiet. And you're getting all this conditioning. And as humans, we realize without realizing, we are conditioned to dress how we dress. We're conditioned to do our hair in the morning. All of this is conditioning. And he said, as you grow as an entrepreneur or a trader, you'll have all these conditionings and these will hold you back. But when you look at a child's mind, it is curious, it is flexible, it is creative. And he'll pick up a pen and start chewing it. And he's like, he's just curious. So the key to mastery is not rigidity. It's to have absolute freedom and flexibility, to explore curiosity, to explore creativity. So if you want to grow your company, you need to be observing the industry. You need to have creative ideas. You need to brainstorm. You need to have a childlike mind, a flexible, open mind. And therefore, if you're living a life of rigidity and stress and friction and meetings and go, where is the room for creativity? Where is the room for this? So when I realized, okay, my job, what I was doing last year, I realized, okay, my job as a founder and a leader is to be educated, creative, give a vision to my team, excite everyone, give everyone a culture. If that's my leverage, then I need to give myself a life that I can do this. And these are the things I've learned in the last year. So since our last pod, there's been so many things that I've learned in 1 year, and it was nice for me to share all of these little details.
It's lovely. And I truly, I've seen your growth, and it notices from outside, and that leverage of your job as a founder and as a CEO is to fire yourself from as many roles as you can within your company and to find the right talent to do it. So it's not what do I have to do, is who can do this in the best way and how can I motivate him. And I've seen that shift that has given you way more freedom from what I'm seeing from outside. And I wanted to ask you also that indirectly also this benefits your trading as well, because you need it less, like literally you don't need trading at this point. So is that a better thing?
Massive. I think one of the biggest psychology issues is anchors. People have anchors in their life. If I'm stressed about rent, I'm going to be stressed in the markets, desperate chasing, and the market amplifies your emotions. If you have money problems, you have more money problems if you come to the markets. So if you don't have a financial base, you will just struggle in the markets. But in my situation now, number one, keeping myself busy is a positive, because if I'm traveling half the time, or if I'm busy XYZ, I'm not going to be staring at M1 all day long. But I know myself, if I sit and I stare at the 1 minute time frame, even if I know there's no opportunity, 3 hours later, I find an opportunity. And I know it's a bad opportunity and I still take it. So for me, the ability to walk away. You know, it's interesting. People say, what are the biggest psychology in trading? Greed, fear, anger, FOMO, revenge trading, the typical. How do you resolve them? Okay, meditate, journal, read books, and you have all these lists of things to improve your psychology. But let's say I've taken a loss and I know I need to be patient. I can now have a good psychology, good mind, and sit there and watch the market and be patient and sit on my hands. Perfect, you are now a good trader. Or the alternative is you don't need to do all of that. You just know, I'm a busy man, I got things to do. I can't afford to watch the screen anymore. I've done my 1 hour, I walk away. So I might have a bad psychology, but my behavior was correct. So what is more important? Maybe a bad mindset, but correct behavior, or good mindset, wrong behavior.
Yeah.
In the end, your mindset doesn't matter as much as your behavior. So for me, the ability to exercise patience in the markets, it didn't mean I had to sit and watch price action and force myself to be patient. Patient can sometimes mean close the laptop, walk away, I can't take a trade anymore. And that's easier to do when you have a flight to catch or a meeting to go to. So the busier life, not only financially, is supporting me that I don't need the trading in the same way. Also keeping myself busy not only keeps me fulfilled and motivated, in the end, it helps me exercise restrictions in the market, which is what we mentioned earlier, that restricted is profitable.
It's interesting that it's one of the few professions that literally, if, for example, you trade 1 hour, you hit stop loss, it's better for your work, for your profession, to go away and play a football match that compared to other corporate job, which, for example, if you fuck up on an essay or on an email, you don't just close the laptop and you go play football. You need to fix it and you need to be improving and what went wrong and blah, blah. But trading, you can do that. And I think it's just human psychology as a whole that even, for example, if you go through a breakup and you're constantly checking the charts and trading or the messages with your ex all the time. But if you go outside with your friends and you just, be more chill and exhale all the problems, maybe it's the wrong psychology, but the right behavior. The same situation, if you will be checking the messages, will be bad. And lastly, now that you are on a better position, that most of the traders that will want to be in your position as well, but maybe they cannot relate to your current status because maybe they are just trading, they don't have these podcasts or companies. What will be the blueprint? Because maybe running company, personal brand, trading, having time for you, they cannot really relate, but maybe they can relate to 1, 2, or 3 key tips that they can start implementing today. What those will be?
Yeah, I wish I started documenting since year 1, because then people would see I have the same life as everyone. My first 3 years, I was frustrated, lost, blown accounts, confused, deep in Telegram groups trying to find the leaked courses. Like everyone, I was doing the same thing. Now, of course, it's that thing of like, don't compare your chapter 1 to someone's chapter 10.
Yeah.
Obviously, that's going to be unfair to yourself. But back in those days, I remember I was a different person. But back then, I had a lot of energy, a lot more energy, I think, because I was naive and I had more hope. Now, I guess life has taught me the reality of things. But I think having youth helps, because when you're 18, 19, 20, you have so much willpower, you have so much energy, and I had no responsibility because I was a university student. My dad is paying for the rent and university is taken care of. I just have to pass my exams. So when you have no responsibility, high willpower, and youthful energy, youthful naivety, this was a beautiful cocktail to do 12 hours days. And I hear people talk about it all the time, like, bro, I backtested all weekend. But I know they didn't. But my life back then was truly, I'm juggling exams, university, clinics, all of these things alongside my backtesting. These days I don't backtest. These days I don't journal, because it's not, back to that thing I said, it's not 10,000 hours to mastery, it's 10,000 reiterations. So in your early stages, in your first 3 to 5 years, you should be learning quick, applying quick, refining quick, changing quick, and feedback loops. You need to have quick feedback loops. If you're taking 3 swing trades a year, it's going to take you 5 years to get any data. So you need to learn how to acquire data quickly, feedback loops, learn from different sources, leverage. Okay, how can I learn with leverage? Mentorships, guidance, online forums. Okay, how can I backtest with leverage? Utilize tools. How can I journal and get insights with leverage? Have a group of friends that you do things together. And this is what I had back in the day. I would do it with my business partners now. But I'd do a Zoom call every single day. I was in one country. I was in Spain. Alex was in the US. Another was in another country. Every single day we would do a Zoom call religiously. And what would we do? We would trade together, share insights together, share lessons together, backtest together. So this is leverage, because it's not my time. It's a group's amount of time. So without knowing it, I was applying little forms of leverages around, and obviously applying my own work ethic and consistency. But I think it's just, you can do this the hard way, which is I'm going to do it alone. I'm going to figure it out myself. I'm going to learn how to test. I'm going to learn how to get data, or I can learn from people. I can utilize funding. I can utilize friends who have a common goal and a common mindset. And you can find leverages, even if you can't afford capital and labor and brand. You can find micro leverages through your ways of growing. And looking back, that's basically what I did. And I think maybe the word of this podcast is leverage, because we're starting to realize, I'm realizing it's the most important thing. And there is 5 forms, but beneath that, there is leverages in your own life. Even just down to leverages of your network, leverages of your relationship with your family, your support system. These are leverages. If you have a losing period and then you have someone to go to in a time of need and they can bring you up, that is leverage. So yeah, there we go. Leverage is the key.
Not only in trading, and just human evolutionary leverage has been key to being with horses to cars.
Yeah, the industrial revolution,
the wheel,
the internet revolution, the AI revolution. These are all forms of leverage.
And leverage comes with exponential growth, not linear growth. Lastly, this is the last question. Imagine all your podcasts are erased right now. All your content is removed. People cannot access your content right now, but you have 60 seconds to spread a message and advice to them. What will you say?
Cool. Yeah, I see these online a lot, and I probably should have had an answer prepared. But what I can say is, after 2 years of hosting the podcast, I've spoken to the brightest minds in the industry, in the trading space. In fact, in New York, I was in a event, a private finance event called the Battle of the Quants. Here was the head of strategy of Bloomberg, a head fund allocator, pension fund. Like, these are the brightest minds in Manhattan. And these guys are on the on the forefront of AI, quant trading, and literally shaping finance as we know it. And I've had conversations with New York Stock Exchange traders, funded traders. Like, I've had all these conversations, and I feel so honored that I have a front row seat to the brightest minds in the world in our industry that are changing the industry or making millions from the industry, and I get to ask them anything I want to. And the common things that I've learned, which is hard to say because there's such a variety, but the common things here is I had a normal background, and I had a path in front of me, and I chose another path. And when I look at all my guests, they all had their story. They had their university, they had their dropout, they had their working at Dunkin' Donuts. They had these stories, but they chose another path. But in choosing the other path, they are, without knowing it or maybe knowing it, they chose a leveraged path. And when you explore a leveraged life and you give it a decade, at the end of that, like all of my guests, like myself, if you give something consistency, 10 years, and leverage, the key thing is leverage, you will have a independent, sovereign life. If you give yourself consistency, hard work, which is what everyone says, but you give yourself a non-leveraged life, you will end up in a rat race, in a corporate ladder, and a stressed, grey hair, losing hair, frustrated life, hating your partner, barely seeing your kids, and stuck to a mortgage life. Now, there are two clear paths here, and you know where they both end up. And we look around, and the millionaires and the billionaires in the world, we see where they ended up, and we see their path, and we see what the average person is doing, and we see where they end up, and we know their path. And each person, at some point in their life, they have this inflection point where they can decide, I can go this way or I can go this way. And after this episode, hopefully you can realize which way to take.
Hopefully. Waqar, it was a pleasure. It was brutal.
Thank you very much.
I'm normally the host of the podcast, but today I feel more like a spectator of the podcast. I really enjoyed it, and I truly learn a lot from you, and I appreciate, and I'm pretty sure that also the people, at least what I always say is that even if just one thing that they learn throughout this 1 hour podcast, they apply it and it changed their mindset, their trading career, or their life in general, it's worth 1 hour's our time. So Waqar, it was a pleasure.
I mean, always a pleasure to see you, bro.
Second,
always
but many more to come, and also have some cool ideas that we can do. And for you to know, the Spanish community was very happy with you. They were very...
How did they... through subtitles, I guess.
Yeah. We did it with subtitles. So
awesome.
Yeah.
Glad to.